Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
Welcome to another episode of Tax Bites, and today we're going to continue that theme of tax problem resolution, those types of things. But we're going to talk more about the examination or disputing what's on a return. Last time we talked about collection issues where you owe money through one means or another, the IRS. This is more, you might call it a typical audit, or what people see the IRS doing, and that's where something on your return is being disputed. And there's really kind of talk about four-ish kinds of, five-ish kind of reasons or causes of these disputes, and kind of the classification of them in broad terms. We're not going to get in great detail of specific resolution methods, but there's going to be some causes and then some very high level discussion on strategy or steps or process on as a potential client, how to resolve some of these things. And the first one is usually something issued, a processing of the return. That's where maybe a form didn't get included with the return, and that can happen even through electronic transmissions where the IRS didn't get the form, your transmission software. Maybe your software didn't even include the form, however, and they need another form added, or some other aspect of that return needs to be resolved to finish processing. A common one today is if you get the premium tax credit for insurance, medical insurance, there's a specific form that has to be filled out showing how much insurance premium there was, how much credit you got, and then maybe do you owe some or get some actually added to your return and those things, and the whole processing up for things like that. So there can be something that drives that kind of aspect of resolving a dispute or something with the IRS, and can hold things up or negate your return, or they just make a broad adjustment based on what they see on their end if you don't submit that missing form. The other one is we've talked about in other videos where third parties, your bank, your investment, advisors, or in your employer submit W-2s, 1099-Bs, and mortgage interest from your bank. Those things go to the IRS, and the IRS looks on the return and says, "Wait a minute, we're not finding it, or what we find differs from what you said, and therefore we have a problem with your return, and we're sending you a notice saying we think there's some adjustments to be made." And that can obviously causes a great deal of disputes of what's on the return. The IRS thinks something's wrong. The other one gets more complex in terms of an art and how return is prepared, which is where you have unusual amounts or methods of reporting income and expenses. And I'll give an example is where it's wrong to report this way, but it happens a lot of time in the self-reported software, which is you used to have unreimbursed business expenses where your job required you to spend money to do things, your car, you drove your car more, you could declare mileage, that kind of thing, and it would go on a Schedule A, but somehow it gets on a Schedule C with a zero revenue. Well, we all know zero revenue and 10,000, 20,000, whatever in expenses is going to suddenly cause a problem, especially over multiple years. So an unusual method, or even can be considered improper, can cause that. And proper methods can even be where you just really didn't report maybe a sale of a house or something the right way, or something like that, and it causes maybe the tax is correct, but because it's reported in an odd way, the IRS says we don't see this right, we have a question. So 3 and 4 kind of are similar, but not always. And then you have the late filing, or more commonly is not filing tax returns, yet there's third-party reporting on your return. They see W-2s, 1099 distributions from your IRA, whatever, and they're expecting to see a return calculated tax, and they don't see it. So the IRS may come up with their own and say, well, you're going to file this return unless you give us the original. And that creates its own dispute of tax in that regards. So what we're going to talk about here is kind of about a three-step process, top line, on if you come with this attitude to a professional, or you look at it from your own situation, if you're going to self-resolve this is what you need to be thinking through when it comes to resolving any questions on your tax return. And the first step is, let's determine what they're disputing. And what I mean by that is, the IRS sends a notice, and they're not necessarily easy to read. Even someone who's been in this for 15 years or more, you can look at it and go, I'm not real sure what the issue is here. So you typically have to require comparing the return to the notice that they've got and going, what's going on here, and so forth. And that's what's required even by a professional. Say, what's the issue here? What am I seeing? A lot of times the IRS sends notices and we can't identify the issue. So that process is how we determine what they're disputing, is comparing the return and the notice and seeing what the differences are, if any. And most clients will struggle with this because that's a very technical process. It may not sound like it, but it really is. And then on top of that, you can have a time lag because a lot of these notices may not occur for a year, 18 months after the return has been filed. And all of a sudden, you're trying to go back in memory, and as I think I've alluded in other videos, is clients can be very unaware of their financial matters and their financial issues, and even the tax return. They can be very unaware of what causes taxes. Just they got more money last year in a bonus. They didn't realize that. So the time lag between what happened 18 months ago or even more and a notice today creates its own issue and struggle in determining what's going on with this notice. But that is the core step, first step. What are they disputing? That's kind of step one. The second step is going to be obviously what's the amount at issue. So we said they're disputing these specific issues on the return. So we want to determine what is the tax bill. The IRS will give you one in that notice typically, not all, but for the most part they'll give you some kind of it. And then you're going to say, okay, we want to figure out what's at risk here dollar wise based on what we think could be disallowed or disputed. If we just say we don't want to do it, what's that number going to be? So you usually have to go and incorporate their proposed changes or possible proposed changes and say, well, the risk here based on this review is, $3,000, $10,000, $50,000 plus penalties. And therefore it defines kind of a risk profile of what we're going to look at and how far we should go. So you kind of go through that and you basically say, is this worth pursuing? I've got a case that might be $700 in taxes, and my fee's going to well exceed that if we push it too far. So it becomes a little bit of discretion, the better part of valor kind of discussion. Do you want to pay me $3,000 to save $700 for the IRS? Probably not in many cases. The one case that may come up is where an issue dollar-wise on one return is not a big deal, but it can cause a perception of the IRS they want to expand scope. So we're looking at 1 year, we see a problem this year on this issue, we're going to go to the next year, and the next year becomes a bigger issue. Or just the emotional and time investment in resolving that second return being expanded to a second return, or scope on the first return being expanded, is worth paying the fee to say, let's kind of nail this down and give the perception that things are reasonably clean here and don't need to expand anything. And that can be its own kind of art style management of an examination or review of a tax return. So, and of course, there's other things where maybe the return they're looking at, or even multiple years, has a larger issue. And I'll give an example. You can get a notice that says, we don't see how much, the mortgage deduction you took, the interest you took seems off compared to this. And if you were to push it, they might move to another form completely and start questioning much greater issues. Things we know might be, questionable, or documentation doesn't exist. So, basically, again, discretion, part of value, take the appropriate steps to close this down as quickly as possible and not let the scope expand. So that kind of comes into determining the risk of the audit or the examination or the dispute. And that's kind of what we're saying here is what's the real risk we're dealing with here. The third step turns into, okay, now we've identified what they're disputing, we've identified the risk, it's worth doing something about in some form or fashion. So we have to identify what we're doing, collect the information, the documentation, and then present that documentation in some fashion to the appropriate group within the IRS. And that can be faxing it to someone in processing, that could be packaging something up with a cover letter and explanation step by step what you've got, and mailing it to a group, in another office. It could be walking it into an office locally and having to sit down for 4 hours and explain things. It just depends. But you're going to need to collect that documentation and present. And that really requires discussing with the client what's being disputed, what the possible taxes are, and so forth, and what documentation we're going to need. We also need to clarify the deadlines and priorities for providing that documentation, because my experience, while there's no hard and fast rule of law, so to speak, the more timely you are with and complete you are and organized you are with your documentation, the IRS, it gets resolved much more quickly. The more you drag it out and stretch it out, the more it just becomes a problem and presents a disorganized client. And so that's its own issue. So clear deadlines and priorities. And what I mean by that in my situation with clients, I say, you know what, the church social, the Boy Scout camp trip, the family reunion, they're going to take a back seat. You need to get this documentation to me quickly so we can look at it, organize it. If there's any gaps, we'll deal with it, and then we send it to the IRS. But it's not like it's due to the IRS in 30 days and I'm being handed that information on the 29th day. That's not really a clear deadline and priority setting at that point. So, of course, we would take the role, if not the client, to organize and substantiate in some fashion to present it to the IRS. And as I said, it's done within a reasonably, it's reasonably complete and done timely. You can present like 80%, 90% very quickly and then say we're going to get you the other 10 or 20% in another 20 days, whatever, but you're giving an organized and kind of a together client when you present things quickly, and that's kind of step 3. If we get into the key takeaways of all this is you're going to see that the client involvement in both risk assessment and documentation is critical. The key thing to understand here is that in resolving these things, while yes, you can argue law and the esoteric aspects of how law is applied, it is largely substantiation. Documentation, this is you own the house you sold, how much you sold it for, and how much you bought it for. Objective documentation is critical in that kind of assessment. You're trying to say you have business expenses. Well, you got business records and receipts you're going to present organized and showing how all these are for this type of expense and all these are for that type of things. You've got the check, you've got the invoice, all that stuff. So documentation in these types of cases is really the nuts and bolts of resolving it. And so it's very imperative that the clients see this as a priority. A lot of times clients, just like their tax return, they give you a box and say, I don't want to know about it, take care of it for me. And that's the same thing with a tax problem. Here is everything I could find, and it's just a bunch of stuff in a box, and you're sorting through trying to make heads or tails of it. And that's not really the best way to handle it. So if you're a person with a tax problem, disputing your return, these are the concepts, just the high-level concepts to have in mind. And if you take them, the resolving of the problem is going to be much more, successful. Again, you're going to be more empowered to do it yourself if you want to, but at the same time, if you're working professional, it's going to go much easier, much more timely, and much more, probably lower cost, that kind of a thing. So, as always, I hope you learned something. So, but if please like, subscribe, share, and have a good day.